Okay, so starting off with looking at the calendar for the week. Actually, we're just going to go through a few little bits from the news, actually, just first of all. So just bringing out the Market Watch, the FT websites here. You know, quite a few things that are hitting the headlines and really a bit of a recap of what really went on last week. One of the main things to talk about for this week is that we're well into US earnings season at the moment. We had some big ones out last week. JP Morgan finishing up about 6-7% on Friday, so you know, a good account of the rally there. Wells Fargo having a good week as well, so very, very strong gains there, which then led to the indices being up for the week as a whole, about 2% over in the US. The indices rallied. But what does it mean for the week ahead and so on? Well, it's a big week, as I say. We've got about a third of the Dow constituents. There's 30 stocks in the Dow. They're elected by a panel, sort of big stocks really. And a third of them have got their results this week, or their earnings, as they call them in the States this week. And there's 80 stocks from the S&P 500 coming out this week as well. So a big week as far as stocks and US stocks are concerned. And really what they're going to be looking at is not so much their results, but more about their guidance for the future. This is one of the things they really worry about, you know, when it comes to releases, is about what's the impact going to be for the future. So what they're talking about is, you know, perceptions of sort of confidence, how they're going to cope with possible sort of deteriorating or concerns over the employment and things like that. So definite concerns there, and really what they're looking for, as I say, is just nice, good, strong, positive guidance as to where we're going to be over the next few weeks. Or few months, indeed. If you're interested in looking at US shares, what you need to do is go to a good site. It's a free site, earnings.com. If you just go into earnings.com there, you get all the information about US stocks in here, and you can really look to see who's coming out pre-market, post-market. So the highlighted releases here, we've got Citigroup today, and this is after. So Citigroup is before market open, and then you've got after market close there on the right-hand side as well. So it gives you a real good full list of things. So if you're interested in trading US shares and US indices, then it's obviously a good idea to be aware of that. Generally, however, these markets report pre and post market, so pre 2:30, post 9 o'clock UK time there. So as I say, it could lead to a few jitters on the US indices there, and maybe a bit of a choppy week, but we will see. To be honest with you. Okay, moving forward to some of the headlines and some of the other economics that we've got kicking on here. First of all, with regards to the banks, they're talking about the 9% capital adequacy ratio is going to stay, and it's going to stay on a more permanent basis. Oh, please go away. Sorry, I'm in on the wrong browser here, and I'm not logged in. But basically, what we're saying is that it was originally they're thinking it's going to be temporary, having a 9% capital adequacy requirement for banks in terms of their lending and how much capital they had to have on their books. But it looks like that's coming to stay, so that could be impacting on shares this morning. Without looking into the individual shares, certainly we were due up 10. We've opened down 10 right now. So if I just have a quick look at perhaps what some of the banks are doing. Let's have a look at the stock. Let's have a look. Well, Barclays down a shade, not really doing a whole heap. Let's have a quick look at Lloyd's and RBS. Lloyd's down a shade. Really moving in line with the market though at this stage, and RBS down sort of 0.5% as well. So nothing really to write home about there. But certainly something to consider if you are going to be trading some of those shares. Of course, Buckles fights to keep his job at G4S. You sort of wonder if he does go, whether Buckle under the pressure is going to be a headline. But obviously that's all to do with the issues with regards to the Olympics and the employment issues they've got there, and about how they've just done an absolutely piss poor job, excuse my French there, it would seem, anyway, and having to draft in 3,500 military troops. So it'd be quite yeah, interesting to see if what sort of headlines come out from that one. But otherwise, what happened last week, what's happening sort of more over the last couple of days, China's reported a 7.6% growth in Q2. Sounds good, doesn't it? But actually, it's its weakest number for 3 years, which certainly makes you worry about things going forward if that's the way the trend is. And I think that's one of the reasons why the guidance, or sort of Q3 guidance for firms with their earnings reporting in the US is so important, because you're seeing this pulling down a little bit. You've got Eurozone hitting international revenues in the US, and people are starting to get a little bit concerned about things, really. So. And obviously, as well as that consumer sentiment number back on Friday, if we move to the economic calendar now, that economic consumer sentiment on Friday was a little lower than expectations as well. It's quite an important number. It came in lower. They don't generally like that. It's a sort of a leading indicator there, really, with concerns over the job market and concerns over the US economy coming in as well there. If we look back through the major data points last week, unemployment claims, where is that one here? That was good. Unemployment claims came in lower, so that's quite interesting. They're expecting it back up this week, back up to 370,000, but that's quite a positive number on the back of quite a few weaker ones. The Japanese interest rates came in pretty much unchanged. What else do we have that was important? Trade balance data that we talked about last Monday. That came in pretty much on expectations as well there. But quite a heavy week we've got this week coming up. So let's just go through what we've got for the week ahead and have a look at where those key time and data points there. I mean, the quietest day is really Friday, but if we look forward to what we've got this week, we've got quite a bit of CPI data this week. We've got CPI in the US, we've got CPI in England, in UK, and we've got it in the Eurozone as well. So CPI today at 10 a.m. UK time, retail sales at 1:30. Those are sort of the big time points for this week, for today, for this Monday. And moving forward to Tuesday, we've got 9:30 CPI. It's more all about CPI than RPI, because it's CPI that the Bank of England used to assess their sort of price inflationary targets and things like that with regards to interest rate decisions as well. And we've got CPI there, as well as that on Monday. So inflationary data, obviously that's all about value of currencies, so they can have quite a big impact if we're looking to trade FX this week. So really look out for those points. If you're trading euro around 10 o'clock, be aware of that. If you're going to trade sterling dollar, your dollar-related markets at 9:30, and then 1:30, just be really careful with those FX positions. Bernanke's going to have his pencil sharpened for 3 o'clock on Tuesday and on Wednesday as well. Just look out for what he may be saying. Again, guidance may be the theme that he's going to be talking about there as well. And as we move forward to other people talking on Thursday, then we've got the MPC minutes coming out as well on Wednesday, here at 9:30 as well. So once again, those minutes, it's more about what they say, of course, and rather what any results were. So, they're expecting no change in the voting. It's certainly about what they say once again. And then finally, moving through to Thursday, as we say, we've got the unemployment claims data out again, so weekly unemployment claims. We're looking at the number going up to 370 from a fall to 350. Very much not expected fall to 350 for last week. Existing home sales, fully fed, so quite a bit of data on Thursday, and then a very sort of nice and dull day on Friday, which is good. So, quite a bit out this week, and certainly expect those CPI numbers at the beginning of the week to have an impact there. So, if you're new to trading, or if you're more of a prudent sort of risk-averse trader, then certainly look to have liquidated positions going into those time points, 9:30, 1:30 tomorrow, and 10 o'clock if you're trading a euro pair today.